I think that the world that we're entering right now is going to become very unpredictable very, very quickly.
The only thing that we know is going to happen is that there's going to be a flood of new US dollars added to the economy.
The Bitcoin Treasury model needs to evolve. What we're seeing is the market essentially telling these companies, you need to innovate and you need to evolve in order to demand attention from the market.
When you buy Bitcoin and sit on it, you're just buying freedom and optionality for yourself. And that's what Strategy has bought. They've bought the most freedom and optionality to pivot into whatever business you need to do in this AI world that we're getting into.
Hey everybody, really excited for this panel discussion on Bitcoin and MicroStrategy. We have an all-star cast right here. We're going to get right into it. We've got Hermes Lux, options trader extraordinaire, Adam Livingston, Bitcoin and finance entertainment extraordinaire on Twitter, Adrian Morris, of course, one of the sharpest minds at MSTR and True North, and of course, Michael Sullivan, Ryan Hogue, and me too, all people that I follow on Twitter, all experts, if I can call them that, when it comes to, markets, MicroStrategy, and Bitcoin. To kick things off, Adrian, can you give us your take on MicroStrategy's price action, for the better part of this year and right now?
Sure. So we have a few things that are playing into the price action. I think everyone got rather excited Q4 last year. In November, we had that blow off top at 543. And since then, if we use that as the litmus test, price action hasn't been cooperating. But I think there's a few things that we can look at. One, I think that we have a lot of the other Bitcoin treasury companies that have taken away a lot of the mind share and attention from Strategy, and with different investor groups chasing those high premiums, those high MNAVs, those initial ones rather. So that definitely took some attention away from the stock. I also think that the preferred offerings, while great on one end, may inadvertently have been taking away some attention from the common stock as well, because I know a lot of people that are in the prefers that are not in MSTR, ironically enough. And third, I think what we are seeing in recent months was a rotation into other plays in the sector. So I did an analysis that showed that there was a pretty sharp correlation. Again, I'm not saying this is causative, but there's a sharp correlation between the run up in Bitcoin miners and the run down in Strategy since the beginning of this year. And I think that the market finally is thinking, what's next? I think the Bitcoin treasury model needs to evolve. I don't know if the current model as it stands right now is sufficient for demanding higher multiples and higher interest into the future. And I think that's what the market's waiting for. The market's no longer enamored with them as much as possible as they were in the past. That doesn't mean that they're bad opportunities, by no means. But what it means is, I think what we're seeing is the market essentially telling these companies, you need to innovate and you need to evolve in order to demand attention from the market. And I have some other reasons, but those are just the primary ones that pop into my head.
One thing that comes to mind for me is the idea that maybe the market is throwing the baby out with the bathwater after the Bitcoin treasury company and I guess crypto treasury company trend sort of went mainstream earlier this year when all of a sudden all these new companies were popping up. Do you think there's any credence to that idea that now MicroStrategy is being associated with companies that are obviously subpar comparatively, like, SBET or something like that, or at least in my opinion, compared to MicroStrategy? Obviously, these are kind of apples and oranges. Is that something you think that might be, what's going on now?
Well, so my view on it is that if you take a look at what MSTR started as, it started as what they call a beta to Bitcoin play, right? It's a leveraged Bitcoin play. It's a beta play to Bitcoin. Similar to how people used to classify the Bitcoin miners. And then they started saying, well, no, it's a leveraged Bitcoin equity. And I think the classification of it kind of evolved. These other companies, and this is where I may differ from some, I view them as a beta to MicroStrategy more than a beta to Bitcoin in a way. I think people saw what happened with Strategy and they were assuming it would happen with other treasury companies. And the market right now, you may have a point that they're throwing the baby out with the bathwater, but that's not quite how I would classify it. I would say, or characterize it perhaps, I would say more accurately, in my view, with Strategy specifically, you have a disconnect in what the market perceives it as and what it actually is. So we had the FASB rule changes. We had all those favorable changes that should have said to the market, if the market is reading it as we think it should, well, we now have Bitcoin-derived earnings. We now have a more legitimized framework for how you can classify these companies. Then why were so many analysts still calling for negative EPS? And why are so many analysts initially, even though earnings has not officially hit yet for Q3, still calling for negative EPS? I think the market is largely discounting the Bitcoin treasury model and the, what do they call it now, the digital asset treasury model. And they don't view it as a legitimate model. They view it as a cash grab. And I think it was treated that way. And now they're waiting to see what is going to come from it, if anything. That's why I'm inclined to say that I'm a long-term MicroStrategy holder. I believe in MicroStrategy long-term, but I think they're going to have to evolve. And I think as they evolve, the rest of the market will evolve with them.
Any thoughts to add here? Maybe we can throw to Neetu.
Yeah, I think that just first of all, the current price is really not that far from what I think a fair market price should be. I know that kind of ticks people off if they have a higher cost basis than some. You can zoom in or out to get any kind of favorable or unfavorable view of Strategy's price that you want. But I think if you were a reasonably intelligent investor and you thought, hey, you know what, the halving's coming up, I believe in the 4-year cycles, and you took an entry position at the beginning of January 2024, Bitcoin is up about 3x from there. So, if Strategy is a 2x play from that, then you would be looking at, okay, then Strategy should have a 6x return from there. And that's really about 360 a share, maybe 370. And I think the current price, even with the dip today, is probably within one standard deviation of that. And I think you kind of have to look at what stocks just do in general. And with Strategy, I think you probably have to look at it as a sine wave, tie like a pendulum to that sine wave, and then tie another pendulum to that pendulum. So you're going to get these swings around a normal kind of support and resistance measurement, but then you're going to get another pendulum swinging on top of that. And I think probably what happened in November was a huge pendulum swing for Bitcoin, plus a huge pendulum swing for the sentiment and Strategy itself. And the last thing that I'll say on it is, I think its Strategy kind of just reminds me of the Bitcoin accumulation production strategy of Tesla. So let's just say that Tesla's pumping out Model Ys or whatever, right? They're the best-selling car, but they have to retool the factory. Well, if that takes 6 weeks, then you're going to have a little bit less production, and then your numbers aren't going to look as good, and the investors are going to be disappointed for a couple of months, and maybe the price tanks. But then they ramp up production, and they're even more efficient later. And that's kind of what Strategy's had to do with the conversion from convertible bond strategy and then moving over to the preferred strategy. They're not just doing these convertible bond deals and slamming a billion here, a couple billion there, and the preferreds are taking time to ramp up. So it's kind of like the preferred Bitcoin production factory is taking some time to mature and build liquidity, and I think patient investors will be rewarded.
Great insight. I want to throw to Adrian. He has a point that he wants to make. Then we'll go to Ryan.
Yeah, so Neethu's point about the sine wave was actually pretty apt in my mind. One of the forms of analysis that I do on Strategy normalizes price as a sine wave. So if you take a look at Bitcoin, you take a look at Strategy, my view on markets is that they're driven by sentiment, they're driven by liquidity, they're driven by expectations, and then fundamentals comes in at the end. So, and if you take a look, if you use it as a sine wave, Strategy serves as an amplitude to the signal of Bitcoin. That quite literally is kind of how the price action has been operating. If you take a look at when Neethu pointed out, if you go all the way back to like say January 2024 or something like that, and I've actually done the analysis individually all the way back to when the BSE started. The amplitude movement, when you take price and volatility into account, spikes and peaks at very, very deliberate times. And I think what we're seeing right now is just a trough instead of a peak. And I think he's right that patient investors will be rewarded, but it's going to be a very, very wild series of swings because of the nature of the relationship. It's not as if Strategy can do something that's going to crank the MNAV. They're going to be very, very sensitive to what the market decides. And it will serve as an amplitude to Bitcoin that will peak and it will trough at different times. And I think investors are having, well, let me be specific. I think some newer investors are having a hard time with that. And I also think some longer term investors are seeing that as a deviation or a breakdown in the strategy and the way it's been operating. I think it's just kind of par for the course due to the nature of the equity.
Yeah, a lot of new investors that bought it at 450, right? Anyways, let's part of the game, right? But let's throw it to Ryan. I know, Ryan, you published a lot of videos, kind of covering price. So I'd love to hear what you think. And then we can move on to, I want to talk about MNAV and I want to talk about the new preferred strategy too.
For sure, yeah. To piggyback off what you were talking about too a second ago is the people who bought high. So I went to Google Trends and just typed in MSTR, like the ticker for the stock. And you can get a pretty good gauge of the price action from the popularity of people typing it into Google, which probably doesn't surprise anybody here, right? That's to me like indicator of how much retail interest there is in the stock. And a lot of that is probably reflective of people that are buying high and selling low, you know, and obviously we want to do the opposite. We want to be smarter than that. So I'm thinking like to me, the MNAV might be almost a derivative of like the sentiment of the stock and retail's search interest, typing into Google. And right now it's low as the share price declines, but I still believe like MSTR, I think it's going to justify like a higher MNAV as it's less of a just derivative of Bitcoin's price in the future. I think currently that's kind of what we think of it as, like a proxy and TradFi for Bitcoin. And what's kept me so interested in this trade since earlier this year really was that Bitcoin, I feel like on the log chart, there's almost like these hints of when it's going to rapidly appreciate. And I call them levels. And I feel like we broke into, on the back of an inverse head and shoulders, on the back of an even more zoomed out macro cup and handle, we broke out into the next level. And we've just been it's been literally 92 days, I counted today, that we've been kind of toying around with this breakout. And I don't know what comes next, but I actually queued up a screenshot of MSTR on the monthly, if you have that one. And this, to me, if I blurred out that we're looking at MSTR here, I would say this kind of looks like a commonly repeated Bitcoin bullish pattern when it's like rapidly rising. I mean, obviously this is a monthly time frame, but if you put this on like Bitcoin on the daily, you see patterns like this all the time where it does quick triangle consolidations, just resumes higher. And this just looks to be like MSTR might be maybe doing the same thing just on a higher time frame here, but could be nearing, anyways, we're definitely nearing a decision point.
So Google Trends is the best technical analysis. That was what we're saying. All right.
I think that like what we need to remember is that strategy is like literally just going through a metamorphosis on a very fundamental level. Like it is just fundamentally a different company when you add that much Bitcoin to your balance sheet. If you look back at November, you have the obvious catalysts like the election crazy hype around Trump promising a Bitcoin strategic reserve. You have that on top of, I think that if you look back at the outstanding convertible debt, they were something like 25% leveraged and now it's 10%. Give or take. So it's fundamentally different when it comes to the capital structure. And then as a result of Saylor just tapping the ATM so hard and getting that much Bitcoin, you're just seeing a lot more uncertainty now because you are in uncharted territory. You're starting to see these questions pop up, with the ownership of the Bitcoin, with the, liquidation preference, who actually owns the Bitcoin in the event of a liquidation scenario, and how much should the market price that if that liquidation scenario is close to an impossibility. So you're seeing all these new questions. And when the company becomes something different, you're just going to see, you're not going to see the blow off top that you will in November because the market is trying to figure out how to price this new thing.
Yeah, those catalysts are important, Adam, because I remember when we first started the True North episodes, we used to go over catalysts. We had a catalyst section and we had like, I don't know, at least like 10 of them, I think. And they're steadily kind of like all dropping off like one by one. And I'd like to hear what you guys think. The only catalyst that I can think of that we kind of haven't really achieved is maybe, obviously Bitcoin pump is always in play, but then S&P 500, potentially interest rates. But I think we're just down to those three. I don't know what other catalysts there really are that would drive sentiment.
Stretch breaking 100 and getting a ton of capital? Would that something, the preferreds kind of, the next thing I wanted to talk about was the preferreds and whether or not, there's true product market fit for them, at least right now. I think over time and with a ratings and things like that, like I don't know much about the preferred, equities market, right? But I've learned about it since Taylor dropped Strike. I think, what was that, January, February this year? Feels like it was yesterday. And then now we have, 4 or 5 of these things. Any thoughts on where we're at with the preferreds? Because that's obviously the big structural change that we're kind of talking about here. We have Stretch on Robinhood now. I think actually the rest of them, Adrian tweeted, are now on Robinhood. So I turned around and immediately, put 20, 30K into Stretch with margin on Robinhood because the math just kind of made sense to me, right? But I'd be curious to hear what you guys think about where we're at with the preferreds. And we can talk about MNAV and we can definitely get to options, but yeah.
Yeah, I think that's a great point about the ratings. That's definitely a great catalyst. But yeah, I'll let somebody else go. I think Adam was going to speak too.
I think with the preferreds, we're literally just in the spot. Nobody likes to hear it, but you have to wait for the market to discover how good they are. And you have been seeing that. I think a lot of people are impatient. Strife is a fixed income product that's paying an 8+% dividend, and it's performed like 34% price appreciation in the 6 months it's been out. So you are seeing the market discovery of the utility of these things, but they're just too good. And the point that I raise is, if there's a investment grade corporate bond equivalence that's 2x collateralized in the corporate world. And then you're comparing that with Strife, which could be, magnitudes of orders more collateralized. You have to start to ask the question, okay, how expensive does Bitcoin need to get? How over collateralized do these things need to be? How high do the yields need to be to start seeing the real capital flow into them? Obviously, the credit ratings are going to be really important, but it's not a popular answer. But guys, I really think that you're just waiting for the market to get it. People don't understand Bitcoin yet. They don't understand what's possible that you can get when you build products on top of that capital base. I just think it's a lot of the waiting game, and you have to build a lot of the pipes in banking and a lot of industries.
Need to anything to add there?
Just that I'm calling it now. We're going to get one more preferred in Q4. I'm going to say an adjustable rate tied to some kind of federal funds rate.
Building out the yield curve. Michael, we haven't heard from you yet. Would love to hear your thoughts, on anything that we've kind of discussed so far. I want to get to MNAV after, but yeah.
The thing that's top of mind with this for me is the quote that people overestimate what they can do in 1 year and underestimate what they can do in 10. And I just keep thinking about that in the context of MSTR right now. As soon as the preferreds rolled out, to me, this just seemed like a very long-term strategy. We had a lot of euphoria from Bitcoiners coming in because the thing that finally they've cared about so much is able to back the bond market, essentially. We're just excited and thought everybody would immediately see the world in the same way they would. And that just has not been the way that Bitcoin has ever evolved or changed over time. This is a long-term game, and we are not going to see the immediate euphoria that we did previously. And I still am as bullish as possible on this thing and the preferred specifically, because I think fundamentally the credit spread here is a unique tool that we're just starting to see evolve. But yeah, I think that the general sentiment around the common ATM is in a bear market right now, but I think we're just starting to see, and I have a lot of optimism for what's coming on the preferreds over the long term. But I don't think it's going to pump your bags next month. And I think back in the summer, I was seeing tons of Bitcoiners that thought that this was going to immediately just become the new strategy. It would take over. But these are long-term games that Saylor's playing right now, in my opinion.
Sure. And if we talk about MNAV for a moment, and kind of maybe where you guys see it going over the next 1 to 2 years. I know it's really hard to, call a number and have it be, something that actually comes to life. But when you think about it, MNAV's kind of been declining, for the better part of the year, for the most part. What do you guys think a realistic range would be that people could expect over the next maybe year or so for MicroStrategy's MNAV?
I'm going to jump out there. I think MNAV is going to be directly dependent on the amount of income that these companies are going to be able to generate outside of selling equity, outside of debt. If they're not going to create a viable income strategy outside of issuing debt and equity, then MNAVs are going to shrink to 1. And there's no reason to think otherwise, in my opinion. Now, if you look at any other company in the stock market, you'll see if you measure the MNAV of those tickers, it's significantly higher, especially like Tesla. And that's because they're generating income. And I've done a few posts on this, but once we see a phase 3, I think that the MNAV is going to expand, but the upper limit is probably undefined right now. The lower limit is going to be 1. Sub 1, I think, is a buyout or a takeover target, acquisition target from a larger company. But, it's going to be heavily dependent on their ability to generate organic income, like I said, without issuing any more debt. So that's my thought on that.
Yeah, I'm inclined to agree. So, especially with the phase comment. So I've been kind of screaming on X that MNAV is sentiment and having people argue with me about it, but MNAV really, truly is sentiment. And to Hermes's point about phase 3, I think phase 1 was strategy getting out of the gate, right? Phase 2 was the preferreds and all the other Bitcoin Treasury companies and the growth that we've seen and the interest that we've seen this year. Phase 3, in my view, is going to be how do they then now transmute that Bitcoin into an operating cash flow. Some Bitcoiners don't like hearing that, but I think it's kind of inevitable because once strategy brought Bitcoin into the heart of TradFi, it is not as if TradFi is going to become Bitcoinized and all of a sudden say Bitcoin is the best and we must now acquiesce to this model. It's going to want to integrate the model into their existing infrastructure. With that, strategy is going to need to find a way, all these companies are going to need to find a way to create operating cash flow and create businesses out of the Bitcoin holdings. That, in my view, will determine a much, much higher multiple. I think Hermes is right that it's undefined. I can't say if it's 3x, 5x, 10x, or whatever. What I can say is that a operating model that exists outside of issuing debt or preferreds or equity to acquire Bitcoin can also be scaled in a way that the market can easily project, makes it far more likely for S&P 500 inclusion to happen. It makes it far more likely for other companies to copy this strategy at scale. And when I say at scale, I'm talking about much, much larger companies than the ones we've seen. And I think it becomes more likely that we hit escape velocity. Once those things take place, I think that is the next phase. And I think what I was speaking to when the market is wondering about what's next, I think that's the what's next the market's waiting for.
Yeah, I do agree with Hermes's point about the MNAV kind of trending towards 1 if we're only talking about dilution. So if we're just going to sell ATM and buy Bitcoin, and I think the math on that does trend to 1, but it's more like it trends to 1 but never touches it. So 1 would be the asymptote that it would continually be approaching but never really reach. But the couple of other variables that a company can do to make sure that they have some value greater than 1 would just be the business model that he mentioned, right? So you can Strategy's got BI software, Metaplanet has a hotel, maybe they need to buy another one, or maybe Strategy just needs to buy a hotel. It's working out for Metaplanet fairly well. And then the other thing would be the leverage that you carry. So I don't know if the math is just this simple. Like if you carry 20% leverage, then your MNAV will trend to 1.2 instead of 1.0. I don't know if the true value on that is 1.1 or 1.3 or 2 or whatever. But just carrying some leverage should, investors should be willing to say, okay, you're buying more Bitcoin with the same amount of money, and that's worth something. So I think having a profitable business or carrying leverage should justify something above 1.
One more point on that. To give you guys an idea here, I think it's worth just a thought experiment, really. I'm in Orlando, and so I have all these theme parks around me. These theme parks are massive. They generate a huge cash flow. In fact, all the Disney parks are one of the main reasons why Disney is so profitable as a company. Their digital stuff doesn't do much for them, and a lot of their movies are just barely breaking even if you consider all the movies combined. But the theme parks, they cost $2 billion, and they generate hundreds of millions of dollars in profit annually. So, and then we compare that to the amount of money and the capital that's being raised by these Bitcoin Treasury companies. I'm not stating that they should go out and try to buy a theme park, but there's got to be a better way to employ the capital that they're raising simply by diluting their stock, right? And so like Adrian and if you said, or Soy said, operating cash flow is going to be paramount in phase 3. And there's a lot of things that they can do with that, whether they buy a hotel or something. So.
Yeah, I agree. So I've been talking about them scaling the BI business for a long time, and people kind of have poo-pooed the idea. But if you think about it, kind of with what Hermes just said and what Nithu just said, the reality of it is that let me be specific. In my view, if they're not going to scale the BI business, I think they should abandon it now and just go all in into becoming like a Bitcoin bank or something to that effect. If the BI business is going to be part of their future, I think they need to incorporate it into how they're scaling out their business. And they don't need to become Microsoft. They don't need to become Palantir. They just need to scale it by 2 or 3x, which given the AI boom is very, very possible. That by itself will command a higher multiple in the market. And it's a goal that's actually very achievable because there are a lot of BI use cases out there for small to mid-tier businesses. They can't afford getting something like a Palantir driven solution, or don't want to scale to enterprise level with purely Microsoft suite tools, where Strategy can come in and make a killing if they take some of the capital they've been raising and apply it towards the BI business and scale it. But that could all be part of phase 3. I think that all these things are on the table, and they're going to have to adapt, because where I might piss people off is I don't think the market's bewildered long term. So they're bewildered long term, but not short term. I think short term they're very, very aware of what's going on, the market players, and they're essentially telling everyone what they think of this strategy, and they need to see what's next. And I think what's next is everything that we're talking about right now. When
I see interviews with Phong Le, it does seem like the BI business is not being abandoned, right?
Well, right, but so this is why I say they should then do something with it. They've raised tens of billions of dollars. A fraction of that into the BI business for recruiting, new product development, more marketing, seeking out small acquisition targets. There are small BI companies out there working on LLMs right now in different models. There's all kinds of things that they can do to generate buzz in the market to try to differentiate that BI model. Maybe they're at odds of how best to do that, which is likely possible. And I'm not saying that they are going to abandon it. I'm just saying that if they're not going to pull the trigger on it, they probably should look into it, into abandoning the BI business or starting to get it scaled. Because the preferreds are great, but just like Adam said, it's going to take time. Just like Michael said, it's going to take time.
And also, being the biggest Bitcoin treasury company on the planet should do something to let them attract talent. So they probably will their BI business will get better and better over time.
That's what I'm hoping. I'm hoping that's what's going to happen. But I think they need to be more active. They do have a position right now. You saw that. I'm sure that most of you saw the chart that Strategy shared the other day that they're closing in on having the largest corporate treasury, or it's number 2 spot. Sorry, right behind Berkshire. Okay, that's great. Do something with it. Like leverage that to attract talent. Leverage that to get more mind share in the market for different reasons. I don't think there's going to be any one magic bullet. I do think that there's going to need to be several things that are attempted and implemented. And I believe very firmly long-term in Strategy's success. But they're going to have to adapt, because what doesn't bend is going to break. And if they become too rigid in what they're thinking, I think they're going to start running into some problems as the years go on.
I do wonder sometimes if they have an incentive to be more passive, because in a lot of ways they've already won this game, at least against the other treasury companies out there. Especially with the S&P inclusion on the horizon. I don't like to speculate too much on when that might happen, but at least to a panel, it might look better if they are extremely consistent and don't do anything quite as wild and don't adapt to phase 3 of this strategy sooner, but instead just take their time, let Bitcoin do its thing, let the pref slowly increase in market share, and kind of just let the free market play out. Like they already have won in a lot of ways.
Yeah, that's a good point, because they had to adopt Bitcoin because they were dying. So they were willing to take a huge risk. But now that they've won, it's about protection. So they can kind of slow play it a little bit more.
That's the point that I routinely try to make, is that when you have 640,000 Bitcoin, and, it's tough to see if the market would necessarily price them at a 1.0 MNAV in perpetuity. Like, maybe they could price it below if there is no optionality in deciding what the business is. But if you just look at the CAGR of Bitcoin over the next decade, they're going to become the largest corporate treasurer. And as individuals, as Bitcoiners, we all know that when you buy Bitcoin and sit on it, you're just buying freedom and optionality for yourself. And that's what Strategy has bought. They've bought the most freedom and optionality to pivot into whatever business you need to do in this AI world that we're getting into. So it's interesting to see how fast they are going to pivot into doing whatever they feel is best. But I think Adrian raises a really interesting point. Like, I don't think that they should sit in that identity crisis for too long. It's like either scrap it and become a all-in Bitcoin bank or what have you, or pivot now.
And I also think that one of the challenges, and this is one of the things I had to overcome when I first got into Strategy, is that I had to take my Bitcoiner hat off and I had to start thinking about things in terms of traditional equities and markets, right? But I also think that as Bitcoiners, and maybe this is what's going on in the space as a whole, because we assume and we all agree that Bitcoin is going to be the predominant asset in the world, we assume that everyone else must think the same way. I think that the notion that we're going to live in a hyper Bitcoinized world is quaint. I don't see that happening. I see Bitcoin becoming one of the predominant assets, but one of. I don't think it's going to be the only one. And the reason why I say that is because traditional financial markets are still greatly disincentivized to bring in something like Strategy into S&P 500, because we have to think about what it says. It legitimizes the Bitcoin treasury model, and it basically says that you can, to Hermes's point, you can issue shares, buy Bitcoin, issue shares, pay the dividends on the preferreds in perpetuity. Is that a model, or is that an economy? I argue that it's an economy, but economies don't belong in the S&P 500. So that's why I'm inclined to say that I think they're going to win. I think Michael's right that they already have won. But the problem with being the top dog is that you assume you're going to stay there forever. And you assume that nothing can destabilize your position. I think that the world that we're entering right now is going to become very unpredictable very, very quickly. And optionality goes both ways. The optionality of Strategy's model is great, but I think they need optionality in terms of what they can do to maintain their position and to scale a profitable business.
Fantastic discussion. Why don't we talk a little bit about the macro, kind of like where we're at macro wise going into Q4? I think a lot of people are trying to figure that out. And then we can talk about options on MicroStrategy and we can wrap. Does anyone want to kick off, a little bit of macro discussion? Maybe Ryan?
Yeah, sure. I'd love to comment on MSTR through the lens of MNAV too. I had a chart I wanted to share that just goes back. It's on the log scale, by the way. It goes back to the COVID low. And it's got a parallel channel from the COVID low to the 2021 top when it had 10x'd. And what I wanted to really point out in this channel is that the 2024 November top was right at the 50% line. I don't think that's random. I think that it helps almost like predict just how crazy the MNAV can expand when there's euphoria. Almost like dropping little hints. Like, why did it top exactly at 544 instead of $10 short of that? You know what I mean? I think there's clues along the way. So I believe personally, I know we're bringing it back to the MNAV here, that, currently as it's a little bit suppressed, based on historical MNAV, like I think we'll see it expand if Bitcoin expands. And I believe MSTR's price has been tracking closely the Bitcoin to gold ratio. And while gold has been so strong, I did point out recently that on the monthly chart, it had an RSI in like the 90s. And the last time it was that high was 1979, right at the top. And, I went back in time to like 2020 when Bitcoin broke out, and it broke out right after gold topped. Like gold monthly RSI, I think was in like the 80s at that point. It cooled off and there was the rotation back into Bitcoin. Then the Bitcoin to gold ratio 7x'd. And MicroStrategy tracked very closely. So I believe we're on the cusp of something like that. Of course, could be wrong, not financial advice, but these are the charts I've been eyeing a lot lately.
Fantastic. Anything to add from anyone, whether on that or macro? Yeah, we can move on to MicroStrategy options because that's definitely really juicy. I'll kick it off with Hermes. So this whole year, Hermes's 10 delta, 30 to 40 DT strategy has been, the strategy to implement. What do you think about that strategy going into Q4?
Well, if I had known strategy was going to be flat for 10 straight months, I might have gone a little bit more dangerously and done the 20 to 30 deltas. Could have been a whole lot more profitable. Make a point clear, the stuff that I'm doing is highly leveraged, a lot more risky with what I'm publishing online. I do stuff offline too, but the stuff that I'm publishing online is not meant for people to try to copy. Because I've generated over 100% of the balance from November just on option premium, and that's not something that you're going to be able to do without leverage. I just want to make that clear to everybody. Going into Q4, I'm being consistent. It's not only is it working, it's not even coming close. The 10 delta rolling every week, targeting 40 DTE, that's not even coming close to at risk. And even when it does, like let's say I was doing this back, and PO, you and I talked months ago. If I was doing this back in October and I did that, they would have run in the money, I think, I don't know, $10-20. I could have rolled them out a few weeks or a month or two and been extremely profitable, even at the money. And that's just the kind of scenario that I see would happen again. And the other thing is, we are now a year into the whole preferred stuff with strategy. That was a complete blindside by everyone when they said they're going to take 3 years to do something, and then they blasted a fire hose of water at everybody, and all the 21 billion ATM was done in like 6 months. I don't think that's going to happen again. And I don't think unless maybe they're planning some huge surprise, but I don't think they're going to be planning a surprise that's going to justify the stock going up like it did, disproportionate to Bitcoin. So I think the only major catalyst going into Q4 is, what is Bitcoin going to do? Is Bitcoin going to double? And then if it does, then we could probably expect that strategy will double, or maybe even less than double, honestly. If the MNAV shrinks, I think if Bitcoin jumps up, it's very likely that we will see further MNAV compression on strategy. Either way, I'm not changing my strategy with selling the 10 deltas. I'll just keep doing what I'm doing, rolling up and out every week, and I don't care if they go in the money.
Now, do you have a plan for taking off some of that leverage at some point? Because if you're holding long leverage into a bear market, that can get ugly.
That would be sad. That would be very sad.
Yeah. So when everything was running, was it end of 2022? I had a ton of like poor man's covered calls exposure to Tesla. I think I don't know, probably 75% of my freaking portfolio had become leveraged Tesla positions that I was selling covered calls against, and they were printing like crazy. But when the Fed raised rates and everybody bailed out of Tesla, and it crashed and it crashed and it crashed and it crashed down to what, $100. The profits that I had made over the past year and a half disappeared in like 3 months. So I think leverage, you kind of have to, pick an exit position at some point if you're afraid that the bear market is coming. And then, if you want to hold straight shares that don't have expiration dates and don't have leverage risk, I think that's probably a prudent thing to try to plan for.
Definitely. The other thing to consider, macro, we got the Fed is about to lower rates again. I don't know if it's this coming week or the week after. I have to look up the Fed meeting date. But that's a whole different catalyst that we are in so we're in a rate lowering cycle. If you recall, the last time we started a Fed lowering cycle, it was in COVID. And it's been raising since 2022, right, to the beginning of this year. The rates have either been going up or they've been flat. And just last month, they started to lower rates. So we're about to introduce a new dynamic that we've never seen, and that is the Fed lowering rates while there are Bitcoin ETFs and Bitcoin Treasury companies. All this is new for the first time coming together. And I think that's definitely worth considering because there's no historical precedent. Nobody knows what's going to happen. But the only thing that we know is going to happen is that there's going to be a flood of new US dollars added to the economy. Going into debt is going to be cheaper. Borrowing is going to be cheaper. Buying things are going to get cheaper, probably for the next year, at least, maybe 2 years. So a big macro consideration. I don't think we can say, here's what happened last year or 2 years ago. And so here's what's going to happen or the last bull cycle for Bitcoin, October through December, because the dynamic that we're in now has never happened.
We're getting juicy. So you're pointing out that we had a historically aggressive rate hike cycle starting in 2022. Many people believe that we're now it will be a historically long rate cut cycle. A lot of people believe that, obviously not a guarantee. I'd be curious, what do you guys think about Bitcoin cycles? I want to make sure that we stay on options, but before that, I just feel like I'm really curious to hear what this panel thinks. Do you think that we're still married to a 4-year Bitcoin cycle? Because a lot of people don't.
No, I don't think you ever were, actually. I think the Bitcoin cycle wasn't driven by halvings and wasn't driven by liquidity directly. I think it was driven by stimulus. And that's why we saw boom and bust cycles. Because if we take a look at a macro view here, between like 2000 and 2022, there was anywhere between 25 and $35 trillion of stimulus injected into the markets globally. And the bulk of that was between 2008 and 2022. And between 2008 and 2022 was Bitcoin was incepted in 2009. And I think the boom bust cycle occurred not because of the halvings and not because of necessarily because of liquidity. It's because that, liquidity seeks quality, but stimulus seeks speculation. And I think what we were seeing was a lot of hot money rotating in and out of different cryptos. We saw a lot of hot money rotating in and out of different stocks. We had all kinds of different frenzy periods during that time because there was a lot of hot money in that was looking to make a profit and leave. And Bitcoin was both the beneficiary and the victim of that. Now, the good thing about it is that Bitcoin being what Bitcoin is, even though it became privy and dependent on that boom bust cycle because of all that stimulus cash, and it was kind of going in and out at 2012 and 2013 to 2015, 2016 at different periods. The narrative of Bitcoin caught on during that time, which was going to happen regardless. But I think that made it come to the fore, and it made it get a lot of attention that it wouldn't have gotten in a non-stimulative environment. So that's why I don't think the cycles really, in my personal opinion, were driving it. I think it was driven by stimulus and the liquidity that came from that stimulus. So right now, to Hermes's point, we are entering into a different period where I think it's very, very hard to say what can happen. But what I think is that if that thesis is right, and it was driven by stimulus more than it was by halvings and direct liquidity, What that means is I think Bitcoin can have a run more similar to gold in that it's going to stair step up and to the right for the foreseeable future. That also means, and we've seen this play out so far with the ETF launch, decreased volatility on Bitcoin, decreased potential for, that 5x, 6x and whatnot. And that's also a function of market cap as well. It takes more money to move Bitcoin, but that also makes it a more stable asset. It makes it more attractive as a macro asset, which makes it more attractive overall, which strategy is going to benefit from, which the treasury companies that persist and survive are going to benefit from, BlackRock, all the ETFs, the entire ecosystem is going to benefit from that.
I was going to say a lot of the high time frame technicals are making me think that like the 4-year cycle is nowhere close to being the reality this time. I think I could go through a bunch that look like it's really just getting started in terms of like an acceleration in Bitcoin's price going to take place between now and my guess honestly is into like the second quarter of 2026, if not further.
Yeah, I think those could be right because somebody tagged me in a post the other day that lined up the business cycles with Bitcoin's price, and they matched up perfectly too. So really, if there's a lot of incentives for political folks too as well, right? If they can pump the market before the midterms, that fits into a lot of I guess influential people's egos and legacies. So a lot of times those type of people get what they want. So it wouldn't really surprise me if we had an extended cycle, if we're still going to call them cycles. So if we get another 6 to 12 months of pump into that, and this 4-year cycle gets extended to 5, that really wouldn't surprise me too much. But at the same time, if we get a super cycle and we did get some kind of insane pump, I think that just makes the crash that much harder. Even if we did get the crazy pump to 1 million or something that some people are still holding out hope for, I mean, a 50% drop from there, even if we don't get the 75% drop, like a 50% drop from there would be absolutely catastrophic for anybody leveraged long. The number one feature for an options trader, if you're going to be long, is everything has to be positioned. Your position size has to be correct for your portfolio. So I think for the average investor in an average environment, I don't know, 5 to 10% in leverage makes sense. 20% would probably be pretty aggressive. And a lot of us are probably well above that, but we're irresponsibly long degens. And I think you just really have to make sure that those type of positions that literally can go to zero are a small enough part of your portfolio that you just can't get wrecked, because shares you can hold forever. There's no expiration date. And if they drop 50%, you can hodl through the storms. But long leverage that has expiration dates, you have to get out before that expiration date. You have to choose an exit price before that expiration date, or one will be chosen for you.
Adam, any thoughts on options in Q4?
Me personally speaking, I don't really think of the catalyst too much. I really just think of it as a probability game. Like I have a very similar strategy to Hermes.
So I'm pretty boring when it comes to options. So Hermes calls it a 10 delta. I've been saying far out of the money, same difference. And the thing with me is position sizing matters. So I took the most of my risk, taking out leverage to buy MSTR, Nvidia, Tesla, and whatnot in 2022. And I've been kind of managing those positions ever since. So what that means is I can go 10 delta, sometimes even to the point where it's even lower than that. The premium is nothing, but because of my position size, I can still benefit from it. And I've literally just been doing that. Now it's allowed me to bring in income. It's allowed me to bring in profits from it, and my profitability has been rather high. But to Nithu's point, that doesn't necessarily mean that's going to work in perpetuity. I still have to have an exit in mind. I can't just keep rolling that 10-sided die, because that's actually a good analogy. I like it. But on the outside chance that something does go wrong, you do have to have, in my view, at least the thought to take something off the table. And my something off the table point is probably going to be this Q4. But coming back to the whole cycle thing, I just don't see Bitcoin hitting 444. I don't see it hitting 1 million in the next 5 years or anything like that. I think it's going to be a slow ascent. So in that view, the crash, I don't think is going to happen for Bitcoin. It's going to correct, 40%, maybe even 50, but like 80 with BlackRock and all the ETFs, I don't think that happens. I could be wrong, but with my strategy options, that's why I'm more bullish long term with strategy and willing to, of all my positions, I think the ones I'm going to hold the longest are probably going to be NVIDIA, Tesla, and Strategy when it comes to equities, and Strategy specifically because of the Bitcoin Treasury strategy. I think that long term, I am very, very incentivized and probably will benefit from holding those shares long term. So my option strategy is very boring, lower risk. I don't roll down. I don't deviate, because the times that I have deviated is when I've actually gotten myself into trouble.
What do you guys think of the volatility of MSTR itself in the short to medium term? So the profitability of that strategy. Reason I ask is because I just wanted to get a good comparison. So last week I was looking at like the 10, 0.15 deltas on something like Apple, where you're getting paid 1/5 of the premium. Like, to the point of, if you have a solid position in MSTR, like even the low deltas, you can make a decent income just because of your the size of your position. So what do you guys think of like the short term profitability? Like, do you see the volatility going down in perpetuity because of Bitcoin's trend to go down in volatility?
I do think the volatility of MSTR is going to be tied to Bitcoin, but kind of coming back to what everyone was talking about at the beginning of the call, the only thing that's going to push that volatility up is sentiment, because implied volatility is essentially the market's sentiment on price movements and the amplitude of those movements. Right. So I think that if we do see MSTR ticking up, and we do see MNAV ticking up, and we do see Bitcoin ticking up, then implied volatility is going to increase. But predicting to what extent, flip a coin. I have no idea. This year has been very different in a lot of ways, and I think that's where Hermes' strategy comes in handy. Roll up and out, and just keep trying to stay with it for as long as possible.
Yeah, Adam, I think that's the perfect way to look at it. Is, when you compare strategy, and people are like, oh, when's the vol going to come back? And if you look at something like a percentile or an IV rank that shows that strategy's implied vol is the lowest it's been in a year, and you think, oh, well, it must not be worth selling covered calls against. But then you compare it to an Apple, and you're like, oh, the premiums are way higher. Premiums are the only thing that really matters. So you can monitor IV, but it can be a little bit misleading sometimes. Like, the premium and is it worth it is the only really thing that really matters. And even when it was like the lowest it had been for the last 365 days, it was still far and away better than literally anything else in the market. And so I usually generally think about it as a ratio too. Like, if 100 shares of strategy right now costs 30 something grand, if I can get paid $300, then I'm getting paid 1%. So that's my return on capital. And as long as that number stays profitable, then I'm willing to be in the trade. But if it drops down to, Apple levels, then I guess I'd be out.
I wanted to quickly comment for anybody listening wanting to buy MSTR calls. Just, of course, it's not financial advice, but it's the advice I'm giving myself. I like calls a little bit more above the $360 share price. And I would be looking out at least probably like to June of 2026. It all depends, I guess, when you get above 360. And then I think the price can really accelerate upwards above 424. MSTR's kind of patterns on the charts have been relatively similar between what played out in 2024 twice. We're just doing it on a higher time frame, I would say, like more drawn out in 2025, assuming we break to the upside. But yeah, anybody looking to buy calls, I'm a little bit more interested above 360 in the longer dated and above 424 in the shorter dated, personally.
Yeah, that makes sense mathematically for sure, because the slightly out of the money calls are going to be when gamma starts to accelerate, and you're going to be able to capture that gamma acceleration until you're 10-20% in the money. So you're going to be able to capture a bunch of the gamma Greeks in that range.
And to go back to Soleil's comment about my strategy, my exit strategy, really, I don't have an exit strategy per se, but I do have a management adjustment strategy. So I try to keep and I've done some posts on this, but I try to keep my poor man's covered call portfolio theta positive, so that I'm generating a positive cash flow daily on the theta decay. And then if the price of the stock drops, my plan is, so I have 13 contracts in this public account I put online. My plan would have to be, in the case of sad days and sad months, to reduce those contracts, to roll out probably at the same strike or near the same strike, unfortunately, and then reduce it from 13 to maybe even like 5 or 6, and just kind of suck it up. And I mean, I've been through this before, but at least I'd be able to buy myself time. I do think any drastic drawdowns. If Bitcoin were to drop by 50% or something, and strategy drops by like 70%, I don't think that would be very long-lived. I think that at most would probably last a few months. And if you've got a poor man's covered call, or if you're just okay with holding on to stock for 9 to 12 months while doing nothing, while generating no income, at worst case scenario, I think you'll be all right.
Yeah, the other thing that I'll say about that is that one of the reasons why I really like covered calls in general is that it gives me like the 80 IQ strategy of like when to exit my leveraged positions. Because if you're just holding shares, you have to figure out, okay, am I going to leg out of these trades? I buy 100 shares. The price of this stock goes up 20%. Okay, I sell 20 of the shares. If it goes up 50%, I sell a couple more shares. But if I have 5 poor man's covered calls and the price goes up so much that I owe a debit in order to roll those calls, then I just close one of my leveraged positions. So it's kind of like the signal that I need to exit some of those long calls because the price has gone up so much that I got wrecked on my short call. And so I think that's just kind of like an easy button way for the market to let you know, hey, it's time to take some profits in this position. If my short call gets wrecked, then it just kind of makes sense to take some of that leverage off the table to pay for it.
Definitely. And for sure, you highlight how awesome your covered calls are doing on those sad days.
Fantastic discussion, guys. Thanks for listening, everyone, and we'll catch you next time.